but it's actually busier than ever with several hundred companies expected to report earnings this week. A lot of them are retailers and other kind of smaller names on the small cap side. So that's why everyone gets bored when the big caps are done. But there's still a few interesting big techs that are still to come. And I brought one of them with me today. But let's see who else I'm going to talk about because there are interesting charts out there that you should be watching this week. Let's dive right in. And one of those big companies that hasn't reported yet is Salesforce, ticker CRM. And as you can see, they have a tremendous earnings surprise track record. They haven't missed in 5 years. That list of perfection is a lot smaller now after the pandemic has started than prior to the pandemic. So this is even more impressive because they were able to do it, and the key quarters right here barely beat 1.5%, but it is still a beat, so they kept their record intact. But what's going on with these shares? Year to date, like a lot of the big caps, they're down 18% over the last 6 months, down 24%. So is this a buying opportunity here for Salesforce on this nice pullback? Still trading at 44 times forward earnings, however. So it's not altogether cheap here, but this quarter is going to be an interesting one to see if these shares can bounce off these 2022 lows here. And then we're going to switch over to one of the retailers. Now, there are a lot of retail names reporting this week, so I chose Ross Stores because they have a pretty good track record too. Just 2 misses here. First one coming at the start of the pandemic. You can see the huge miss there. And then another one early last year. Now, they are going to be reporting the holiday quarter. It should be good, but people have kind of soured on the retailers, thinking that the consumer is going to be pulling back here in 2022 and that maybe 2021 was the peak spending year. But was it? We don't know. And Ross Stores, these shares are down 22% over the last 6 months. So they've been steadily losing some steam here. Could this be a time to buy this good name in the apparel retail side? They're trading at 17 times here, so a lot cheaper than they were earlier in 2021, but not dirt cheap, not yet. So this is one I'm going to be watching on the retail side. Then we actually have a meme stock reporting this week, AMC. I was fortunate enough to partake in AMC over this last weekend as I went to the movie theater, and it was more crowded than I anticipated here in Chicago. But that should be improving as things go along. And you can see it in their earnings estimates, not so much in their earnings meet or beat here, as they're basically missing almost every quarter. But because it was a meme stock, nobody cared. But maybe they care now as these shares are down big over the last 6 months, down 56%. But revenue is expected to double this coming year to $4.8 billion. And while they're still expected to lose money in 2022, it's much improved versus 2020 when they lost $16.15 a share, expected to only lose 51 cents in 2022. There's a big slate of good movies that are going to be launching this year in addition to Spider-Man. A lot of these tentpole movies like Batman and Top Gun 2 and others that were kind of held back during the worst of the pandemic. Those are going to be launching now. Will AMC actually be able to get back into earnings, positive earnings for 2022? I don't know, but that could be a driver for this stock. Then we're switching back over to retail with Urban Outfitters. Now, Urban does not just own Urban Outfitters, it is also Anthropologie and Free People. And all 3 of those chains have really seen a resurgence during the pandemic, but supply chain issues really spooked the market last quarter, and these shares are now down 24% in the last 6 months as well. So you can see kind of a pattern with some of these apparel retailers. They didn't just start weakening in 2022. They started last year even with the good holiday season. And yes, this is a holiday season as well. Um, One thing that I do like about Urban Outfitters is that it does have that smaller home business, and they have it at in the apartment or living, I think they're calling it now, on Urban Outfitters. But they also have a big furniture business on Anthropology, and that area has been strong. They are throwing more money into it, so I like that aspect of it. So when clothing maybe isn't doing as well, maybe the furniture side will be, but I still think clothing is going to be doing pretty well here. But the street does not, these shares are cheap, trading at 9 times forward earnings. So is this a buying opportunity in Urban Outfitters? Maybe, but this is one to watch. And then we're going to switch over to one of its competitors, Abercrombie and Fitch. They had their problems pre-pandemic with new management coming in and problems with just on their selection that with their product, but that has all changed. As you can see here in 2020, 2021, they really upped their game in the jeans area in jeans collection, and that's been selling well. But this stock too is all up and down. It's actually up year to date 11%. So that's a little different compared to some of these other retailers, but it too is cheap at just 9.8 times forward earnings. So the street is pretty down on its luck on some of these apparel retailers, but it might be time to take a look. So there's a lot more to come than just these 5 companies. As I said, there's a couple hundred companies reporting this week, and I'm going to be tweeting out about a lot of the other stock charts, including a lot of the other apparel retailers. So you don't want to miss a single one of my tweets. You can get them all on Twitter or on StockTwits. And be sure to catch all of our videos, as I've got one more video still to come this earnings season, and you don't want to miss any of them. And you want to be in place for next earnings season because it's fast approaching. So be sure to get them all at zacks.com/YouTube, and I'll see you again next time with some more earnings charts.